Hey, what is going on, Bulls and Bears? Back with another dose of economic reality. Today, we're going to talk about 40-year mortgages. You knew it was going to come here, and here it is. We talked about this a few years ago. We're going to get into that today. The home ownership rate never recovered from the housing bust. What does that mean? We're going to talk about it. Mortgage debt today is higher, even with less people owning their homes. We're going to get into that and how much carnage until more rate cuts and the Fed resumes buying securities once again. We're going to talk about all about the Fed's balance sheet and their plan to reduce their holdings. Let's start right here with the 40-year mortgage. Now, the 40-year mortgage is being introduced by FHA as part of a loss mitigation option for people that were affected by the health crisis. Now, the question that we should ask is, I thought we had an economic recovery going on here. I thought everything was getting back to normal. Why do we need to even talk about a 40-year essentially rescue program for these people that are behind on their mortgages? Now, a report came out just a few months ago that said that over 7% of FHA mortgage borrowers were behind on their mortgage or late on their payment. Now, these rising rates are especially affecting FHA borrowers because they're typically people that have lower incomes and can get in with a lower down payment. So, of course, these higher mortgage rates are affecting the FHA borrowers the most. But we should also ask, where does this end? Why not a 50-year mortgage? Why not a 60-year mortgage? I mean, people are, for the most part, in debt for life anyways. So why stop at 40 years? We see this in car loans. Go back 10, 15 years. The most common car loan was a 5-year loan. Now it's edging towards 6 and even 7-year car loans are going to be the dominant as far as people borrowing money. So is this going to fix the problem? No, it's just going to give people a lower monthly payment, therefore allowing people to take out bigger loans, therefore pushing the price of vehicles up even higher. It's not going to cause prices to come down, that's for sure. And in fact, if they wanted the cost of vehicles to come down, they could pass a law that says no one's allowed to get longer than a 36-month loan. That would actually bring the prices of vehicles down. It still may be challenging though with all the supply chain issues that we're having right now. So it's a crazy situation right now across the board. But we know that extending loan terms definitely does not address the underlying issue of unaffordability. Sure, it'll help people get a lower monthly payment, but on the back end of that longer loan, they end up paying much more than they would if they would have paid it off sooner. So bottom line here, folks, longer terms for loans and mortgages definitely does not fix the problem. In fact, it makes it worse. And it's pretty ridiculous that all the same people that got us into this mess, under all this debt, all these economic problems, rising prices, rising cost of living, all these same characters are the same ones that we have in control right now. And people expect they're going to somehow come up with solutions. It's not going to happen. Next, home ownership never recovered from the housing bust. Let's take a look here. Now, we've talked about this before, but it's very important that we keep coming back to this. So, during the housing boom of the early to mid 2000s, we saw home ownership over 69% at one point. But what happened? Home ownership dropped. Many people lost their homes, got foreclosed. In some cases, just dropped the keys off back at the lender. But what happened? Home ownership never recovered to back to where it was back then. The biggest we saw was after the great health crisis came out. It jumped up to just under 68%. What happened when home prices took a big drop? Well, corporations, investors came in and bought up more homes, so home ownership dropped. And here we stand today at just over 65%. So with less people owning their home, we still have higher mortgage debt than we did even back at the peak of the housing bubble. So yes, things are much worse today in real estate and housing than they were back then, but it doesn't mean that the bubble is going to bust because we have things like the 40-year mortgage, we have the endless bank liquidity operations still continuing. We have banks able to loan out endless amounts of money via a zero reserve requirement. There's no cap on how much they can loan out versus how much they have in savings and deposits. So, yes, this could get much worse. The question is, how much carnage will we see before the Fed comes in and lowers rates once again, before the Fed starts buying assets once again? Because these markets, including the real estate market, is all propped up on easy money and Fed backing. Does anyone think they're going to keep allowing mortgage rates to rise to infinity? Of course not. There's going to be some carnage. There'll be a few people losing their homes, and then they'll come back in with more rescue programs, more bailouts, more forbearance on foreclosures, more money printing, more down payment assistance programs for people that can't afford the down payment. And I think that 40-year mortgages are going to extend beyond just FHA loans. I think that's going to be the industry standard a few years down the road from now. Folks, please let me know what you think about all this. But I think this is the direction that we're headed in. I don't think any bubbles are going to be allowed to pop. I think it's going to be a crash through inflation. That means the purchasing power of your dollar is crashing as prices continue to rise. And the people that got us into this mess, of course, they're not going to take the blame. They're just going to blame what's happening over in Europe with the conflict, just like they blamed the health crisis a few years ago for everything that's happening. Now, on this bullet point right here, the mortgage debt being higher today, even though less people own their homes, let's take a look. Now, we probably won't see the first quarter 2022 numbers until about the early part of next month, the early part of May, but we do see record-breaking increases when we look at the fourth quarter 2021 with a total of over 15.6 trillion in debt. Now let's take a look at the Fed balance sheet. We know the Fed buys debt, basically monetizes the debt. They buy mortgage-backed securities, which allows mortgage lenders to continue to loan out money without any risk because the buyer and lender of last resort is there to take those loans off of the books of the banks. But the Fed promised to stop buying securities by the end of March. Let's zoom into a one-year chart. And it looks to be leveling out. If we draw a line here, let's go ahead and try to take a look at the trend in the increase of the Fed's balance sheet by drawing a line on this chart right here. And we can see that it is happening. The Fed, they were still buying up until the end of March. But to a lesser degree, the increase in the balance sheet has definitely dwindled. And now we look here to the far right. This is as of the end of March. Will they say, or will they do what they say they were going to do and now start shedding assets from their balance sheet? If they do, that's going to be the true test for these markets, including the housing market. We know the stock market thus far has not liked the small rate hikes and the talks of future rate hikes. Why? Because these markets, this economy is all propped up on easy money, debt, lending, and spending. So folks, please let me know what you think down in comments. Will we see some sort of price correction here, deflation, or are all these rescue programs and a reversal of what they're doing right now, is that going to come in and prevent any sort of cost of living declining? I don't think we're going to see any long-term cost of living declines. We did see a pullback in the price of oil, a little bit of a dip in the cost of gasoline, but I think long-term down the road, we're headed higher in most areas of the economy. Again, please let me know down in the comments, what do you think about the 40-year mortgage modification to help distressed borrowers of these FHA loans? Is that going to fix anything, or is it just going to add more fuel to the fire? Again, please let me know. Thanks everybody for being here. Peace.